Assalamu alaikum. Today I'm going to discuss about chapter number 5, the accounting cycle reporting financial results. In this chapter we examine how companies prepare general purpose financial statements used by investors, creditors, managers. In addition, we discuss how certain events are disclosed in the notes that accompany financial statements. Financial statements preparation. For financial statement preparations, we required income statement summarizing revenues and expense for a period showing net income or loss. For example, a company might sell a product for $100 and this revenue transactions results in an immediate positive cash flow into the enterprise if the customer pay cash at the time of transactions. And expected future cash flow result if it is a credit transactions in which payment is to be received later. And expenses have opposite effects. However, revenue results in a positive cash flow and expense results in a negative cash flow. And these positive and negative cash flow indicates the directional impacts on cash. Now, the statements of retained earnings. This basically shows the changes in retained earnings during a period connecting net income to ending retained earnings. Now, the balance sheet. Balance sheet is a financial statement that describes where the enterprise stands at a specific period of time, and it also shows words the business owns assets. Uh, Assets are basically owned by the company, including cash, inventory, and property, and what it owes liabilities. Liabilities are basically obligation or creditors, including accounts payables, salary payables, and loans, and the owner's equity. And owner equity basically claims to the assets of the company, including retained earning and common stock. Uh, Relationship among financial statements. So the income statements include the net income is added to the retained earnings or on the statement of retained earning. And in the statement of retained earning, ending earnings is reported on the balance sheet as a component of equity. And in balance sheet is also known as a snapshot statement of the company financial position at a specific point in time. Now, let's talk about closing the temporary accounts. Firstly, revenue accounts closed to the income summary account, and then expense account closed to the income summary account, and then income summary account closed to the retained earning accounts, and then dividend accounts close to the retained earning accounts. And in next slide, I'm going to discuss about post closing trial balance. Um, in post closing trial balance, all temporary account have a zero balance after closing, and the balance sheet account remains open with their ending balance. Now, let's talk about financial analysis and decision making. It's include ratio analysis that helps evaluate the company's profitability, liquidity, and solvency. And in trend analysis, it examines changes in financial data over time to identify patterns and trends. Let's talk about ethics, fraud, and corporate governance. Um, in ethical accounting, um, in ethical accounting, ethical behavior is critical in accounting to ensure the integrity and accuracy of financial information, and it's important for objectivity, confidentiality, and integrity. And in financial statement for different periods, it's include interim financial statements and annual financial statements. In interim financial statements prepared for the period shorter than a year, such as quarterly or monthly statements, and in annual financial statements prepared at the end of each fiscal year, providing a comprehensive overview of the company financial performance. Key takeaways include understanding the accounting cycle in this process is fundamental to recording, summarizing, and reporting financial information. And secondly, prepare accurate financial statements, and accurate statements are essentials for making sound business decisions. Lastly, apply ethical principles that help to conduct is paramount in the accounting profession.